Hey, good afternoon, everyone. My name is Ram Dhamija. Welcome to my channel. Today is 24th of February, and it was a slightly rough day today for the markets. And the markets actually opened gap down, and this was primarily because of the US markets not doing very well. And in the Gift Nifty itself, it was indicated that we will have a rough 200 point down open. On Friday itself, it had gone down that much. Now, the only silver lining today was that we did not fall further after opening, and we kind of consolidated within that fall. But nonetheless, we have broken the decisive level of 22,780 odd zone where we were there for the last 15 days, and we have decisively gone towards 22,500 now, and we look like we might breach that as well. So levels are now just coming and going one after the other, and I have said this before also that once the down move starts, then rapidly you see a 600-800,000 point fall as well in the markets. In the markets doesn't stop. So I will take you through all of that and what transpired in the market and what is in store in today's video. So if we look at, this is the Nifty 3-minute chart. As I was saying, we opened gap down over here, but then pretty much we have been in a range, so which was one good thing. So in spite of the market opening down 1%, we haven't fallen further from that, and we tried to consolidate in this range, which is good for option sellers if you ask me, because the premiums just melted and there was not too much wild movement. Now if we look at, this is the Nifty chart on a daily time frame, and I had said this before as well, that if we have to break this range or this support, there will have to be some global Q or event. So the global Q came in terms of US markets actually registering their biggest fall of 2025, which was not much actually. If you ask me, it was just a couple of percentage points, but that was enough for us to get this kind of a gap down, and 2% down we are, 200 points down we are after a 2% gap in the US, down in the US markets. Probably why we did not break this too much is because the US futures are trading in green, so they are at 0.5% up. So if you see that 2% fall has kind of got somewhat smoothened out by this 0.5% futures up in the US market right now. Now with this today's fall, what has happened is that this is the 52-week high, fall from 52-week high number. Now Nifty has going close to 15% mark. It has crossed 14%. It's 14.18 now. It's going closer to that 15. Any correction that goes beyond 20 becomes a bear market, right? So we are getting there, close to it, very much close to it. And today we saw that IT, which was holding out, is now actually exceeded Nifty. So Nifty is 14.1, IT is minus 14.4. So IT has fallen more from the top. Mid caps, small caps are in the 20 range, and small caps have actually exceeded 20, and then the other indices like alpha, PSC, etc. are nearing the 30% correction. I can imagine what will be happening to individual names in these, which will be down anywhere between 20 to 60%. Now coming to the sectoral indices, how it played out. So Nifty IT was the one that took the brunt today at minus 2.66% down. It could also be a reason that IT was not falling at all, and now when the fall has started in Nifty, then IT is kind of helping that fall. Metals, PSC all down, infra down, small cap down, Nifty 50 down itself. Anything that was in green, I doubt it. FMCG was in green, 0.39. Autos slightly. Autos had fallen tremendously for the last 3-4 days after that EV announcement, so it's hardly anything. Pharma was flat. VIX, surprise is again down. Now I don't know what does this indicate, because we are falling down 200 points and VIX is not increasing. So either it could be that post budget what happens is typically that VIX tends to fall. So but we are even many days ahead of the budget as well. Budget is past us now, so it could be related to that. That is one hypothesis, but otherwise VIX is falling down, and it's actually good for the option sellers, because the VIX falls down, the option sellers make some money. Coming to the heat maps, this is how the heat maps are looking like. So in Nifty 50, Infi was down minus 2.7, TCS was down minus 2.8, HCL minus 3.4. So all IT was down. Along with that, Bharti was down minus 2.2, Tata Steel minus 2.2, HP, NTPC minus 2. In terms of Nifty next, LTIM was down -4%, Naukri -5%. So all the IT names are taking it on the chin. Zomato -3.4. Varun Beverages was up, United Spirits was up, and that's why the FMCG index also you can see is slightly up. In no actually real this thing in Nifty 500, there will be names which are down 4, 5, 6, 7%. So it's no point seeing this because there's a sea of red over here. Now coming to what the international cues are looking like, as I had said, Nasdaq futures are up. You can see this 0.54%. So this is after Nasdaq had fallen 2%. So 0.54 is cushioning that fall. Apart from that, dollar index is at 106, which is absolutely fine. Brent is at below 75, which is good for us. Our currency is holding at 86.6, and gold is inching towards 3000. Silver is going higher. So international cues are moderately okay now. They were not so great on Friday, and that's why we have fallen. Actually, we need a reason to fall if the markets are weak. Any reason that comes, is taken as a bad reason, and the markets fall. But today, there's nothing to complain from an option seller's perspective. What has happened is that markets post open actually did not move, and it was a very, very smooth day for option selling. I would be ending at 1%, around 1% today, and Feb has become now exceedingly good at 5%. So as I had said earlier also, that Feb and March are 2 months which are very good for option sellers. Typically that's been the case. I think maybe a lot of things get settled in post budget, and that could be a reason for the volatility going down. And this time there was an added reason that US presidential swearing in was there, Fed decision was there, budget was there, RBI policy was there, so many things were there. So now we are seeing, in spite of the markets falling, VIX is not going up, and that is helping the option sellers. Like today there was hardly any movement. So yeah, so today was fine. And uh, another thing is that at this point in time, so I had a lot of calls today with a lot of people who wanted their mutual fund portfolio construction to be made. So I have received quite many responses of people who want to make mutual fund portfolios, who want help to make mutual fund portfolios. So thank you for that. I'm truly very humbled to see the kind of response that is there. And I'm sorry I haven't been able to call all of you. I will call you over the next 2, 3, 4 days, because each client takes a lot of time. I have to understand their requirements and then suggest to them, what is the best way forward. So I will call everyone. I have all the forms, all the names, numbers, etc. in the Google sheet. So I have made a note of that. I have contacted some of you today, and it was really good talking to some of the people, and I hope to connect with the others as well. So thank you for that. But yeah, coming back to the point that this is also the time to make your portfolios, but in a very, very sensible way, because I get a lot of people who are stuck in stocks and in names which are not high quality. I feel really bad for them, because I can't offer any advice on that. I mean, what does one do if you're stuck in such names? Because the thesis on which you picked these names, if that thesis is not working out, then you need to reassess whether you want to be in that stock or not. So my suggestion always to retail is, please don't venture into individual stock names. Please go via the mutual fund ETF route. It's much better, much more systematic, less stress, higher returns. What more does one need? Right. So for retail, I think that going through mutual fund works the best, and I help people make mutual fund portfolios, and that's what I had shared in my previous video. And by filling the form, a lot of people have got in touch with me, so I'm very happy with that. Thank you so much. And it's a good feeling that a lot of people watch you, and a lot of people watch you intently and what you say. So I haven't spoken much about myself, which I will. I think I should in videos, because people who get associated or who watch the video should know much, little bit at least about me. But I haven't spoken much about that. But Sufficient to say that I'm a full-time derivatives trader, a successful derivatives trader. I trade a fairly large options book, my own book. I don't trade for anyone else, and I've been consistently profitable uh, for many years now. And now I share my thoughts on YouTube for people to benefit, and they can pick up something from here. It'll be nice. So yeah, I'll share more things as we go along, and whoever calls me, definitely I tell them my perspective about things. So yeah, so that's it from me now. If you like my video, please do subscribe to the channel, and please do share it with your friends. Please leave your comments. And if you want to get in touch with me regarding your mutual fund portfolio construction, you can fill the form. I might not be able to get back to you immediately, but it might take 3, 4, 5 days for me to call you, but I will call you for sure. Yeah. So that's it from me now. I hope everyone had a good day in terms of option selling. Option buyers might not have had such a great day, but it's time to be cautious. It's time to be very cautious on small cap, mid cap names, etc. It's time to be cautious on indexes as well. Let's see where the index actually stops. We are already at 22,570 odd. Let's see if this actually takes us further down. If it does, then there's going to be more pain, but we have to endure that pain because in the bear markets do tend to get irrational on the downside. So yeah, so let's see how tomorrow is, and I shall see you with another video, another update tomorrow. So see you, take care, bye bye.